Nigerian equities declined 5% in the first half of the year, with mixed trade recorded across key market segments. At the fixed income market, traders await the third quarter issuance calendar from the Debt Management Office and note that they expect market yields to advance. Oluseyi Akinbi, the Managing Director of Zedcap Partners, shares his thoughts with us on the show today and gives us his thoughts on what Nigeria's capital markets performance will be like in the second half of the year. Shay, thank you so much for your time. I think a good place to start would be to get your thoughts on the key catalysts for equities in the second half. As you know, the market didn't do very well in the first half, as widely expected. What for you could get the market moving in the second half of the year?
Okay, thank you very much, Bole, for that question. Thanks for having me on the show. For the equities markets, for the first half of the year, what we saw was a tepid performance, basically, after having the Nigerian market was the biggest, had the highest return, right, globally last year. And then for the start of this year, what we saw was a big reversal in that sentiment. And that was basically because of the advancement in yields in the fixed income markets that translated into a major sell-off in the equities market. And of course, we saw bigger reversal in flows from the offshore investors, also trying to repatriate in the market. So that contributed to the tepid performance in the equities market in the first half of the year. But going into the second half of the year, right, we see a lot of factors contributing to what will happen. First of all, we see the actions of the CBN, right, weighing on that market. If the CBN maintains an accommodative policy up to the end of the year, we might see some decent rally come into that market. And of course, if FX liquidity also improves, we see offshore investors come back into our markets to take up some decent names in that market. So I think those are the factors that we believe will shape up the happenings in the equities market in the second half of the year.
Now, clearly the market is in the context of a broader economy. What for you are your key macro concerns concerning the economy moving forward? So some may suggest it's forex stability, others may suggest the insurgency that, as you know, has been a big issue over the last few years. And of course, the resurgence of inflation in the second half of the year is another concern for others.
Yeah, okay. For my opinion, right, the CBN has leaned towards the growth story, right? They are doing everything possible to make sure that Nigeria's growth comes out stronger. As the last GDP figures, what we saw was a 0.51 growth quarter on quarter, right? And that for the CBN is not impressive enough compared to what other advanced economies have done over the same period, right? So we believe that the CBN will continue to maintain an accommodative policy, but we also know that that posturing will continue to weigh on the FX market, right? And so far so good. We've seen that playing whereby rates, FX rates or exchange rates in the market are trading in the spread between the I&E window and then the black market or the primary market, as we know it, is between 18 naira to 19 naira, depending on which of the rates you're looking at. So, well, we can't have everything, but I think the CBN's trajectory for growth will continue to weigh in on all other indices that we might be looking at.
If we go back to the market and begin to pick sectors, which sectors do you think will likely outperform in the second half of the year?
Okay, well, for the equities market, we believe that the banking names will continue to do well. A lot of banks were able to pay out record dividends. And then when you still compare some of the equity dividend yields to the short tenor instruments in the fixed income market, we still find out that some of these yields are more attractive compared to the short tenor yields. So of course, we'll continue to see the banking names or the names, the good names, the blue chip names that pay decent dividend well above between 7 to 9%, right? Continue to enjoy a lot of demand. And then for the fixed income markets, we believe that yields will continue to range. It will continue to be a range-driven market whereby we see rates trade between 13 to 14% in the medium term.
All right, a quick view on the fixed income market. Some are suggesting that we would likely see higher yields. Do you agree with that sentiment?
Well, it depends on what the DMO strategy is, right? The DMO has an overall strategy to manage the cost of borrowing across board, and that they've been doing, although the sentiments of inflation and and COVID and everything are doing on the markets, whereby we've seen yields increase by about 600 basis points from the start of the year, right? And going into the second half of the year, we see the federal government submit supplementary budgets of around 900 billion, right? So what our sentiment is that about 90% of that money will be borrowed from the local market, and of course that will lead to increment in yields. But anyway, we expect a big bond maturity filter into the market this month, right. Plus coupons. We're expecting total inflows of around about 900 billion. So of course, we know that there's a lot of cash to meet the defense supply that will be coming from the DMO. So we just expect rates to tick up slightly, but nothing too aggressive.